A stock buyback occurs when a company buys back its shares from the stock market. Thanks for watching today's video. Just kidding. Actually, there's a lot of implications when a company decides to buy back their own stock. Sometimes the buyback can benefit shareholders as an efficient way to pay out value. In other cases, stock buybacks can be used to manipulate accounting figures and boost executive pay. There are even times when firms are banned from stock buybacks. So if a company I own stock in is buying back their shares, what do I need to know? Hi, my name is Chris Kovalchuk, and I'm an Associate Portfolio Manager at Claret Asset Management. The share buyback is a relatively simple idea. A company strives to make money throughout the year. Generally, this means they produce free cash flow. This is the cash a company generates after accounting for cash outflows to support operations and maintain its capital assets. As a company makes money throughout the year, they face a decision. When they have excess money, what should they do with these excess funds? Well, a company can generally do one or more of the following four options. Option number one, the firm can make capital expenditures, which are investments that a company makes to grow their business operations. For example, buying a new machine or building. Option two, they can acquire another company or business unit. Option number three, they can now pay cash dividends to shareholders. And finally, option number four, they can use the money to repurchase their shares, a stock buyback. So let's focus on that last point. Why would a company want to do this? Let's say you invest in Fairytale Inc. The company is worth $1 million, and they have 10,000 shares outstanding at a price of $100 per share. They also generate $500,000 of profit each year. That means the company generates $50 for every share. You own 1,000 shares of Fairytale Inc., or 10% of the total company. Tomorrow, the company decides to repurchase 1,000 shares. You now own 11.11% of the outstanding company, and each share now generates $55.56 of earnings. On paper, you're very happy. You own more of a company, and it looks like the company is generating more earnings per share. In reality, all they are doing is financial engineering. The next question you need to ask yourself is, why would a company buy back its own stock rather than paying a dividend? From the investor standpoint, a share buyback has its advantages. As a capital gain, you are currently taxed at a lower rate than a dividend in Canada in non-registered accounts. Also, when a firm chooses to begin to pay a dividend, they generally look to continue that dividend in perpetuity. Cutting a dividend is a negative sign from management about the future prospects for the business. A stock buyback is a lot more flexible. Additionally, if management is choosing to spend money to buy back its own stock, it's generally seen as a positive signal. If management is buying back their shares, they see it as a good investment. A big advocate for stock buybacks is Warren Buffett, and his firm exemplifies that. Berkshire Hathaway repurchased about $24.7 billion of its stock last year. That's roughly 5.2% of its shares outstanding. Berkshire pays no dividend, and likely won't do so as long as the 90-year-old Buffett remains CEO, given his aversion to them. However, they can also be a waste of money. Everyone has heard the investing adage of buy low, sell high. Well, if a company is buying their stock when it's high, hoping it gets even higher, they might be making a bad investment that could jeopardize the use of these funds. There are some instances where firms are banned from buying back their stock. In Canada and the US, banks were banned from buying back their own stock during the pandemic. This was imposed on them by their regulator, as they felt the banks should be setting aside funds to cover losses that may arise as a result of the pandemic. Hopefully this video has helped explain what's really happening when a company decides to engage in a stock buyback. Thanks for watching. For more investment tips, feel free to visit our website at claret.ca. Or if you want to get a hold of me directly, check out the link in the description below. And while you're there, don't forget to like and subscribe to this channel.